Howdy folks, this is Ben Westbrook, a Texas personal injury attorney, and today I'm going to talk to you about a lawsuit that is in the news that involves the stock market investing app Robinhood and the Cinderella story of the little stock that could, known as Gamestop, that has seen a huge surge in its stock price thanks to a subreddit known as Wall Street Bets. So in this video, we're going to discuss the lawsuit that was filed today. We're going to look at the actual pleadings, and we're going to talk about what the causes of action against Robinhood are. We're going to talk about what has led to this cause of action, what's going on with the GameStop stock and Wall Street Bets and Robinhood, and just kind of look at all that and try to give you a better idea of what's going on. So if you don't know, this has been quite the story in the news, but there is a subreddit called Wall Street Bets, and on that subreddit people talk about different investments that they may make. They recommend investments, they show their gains, try to give each other tips, things like that. And this subreddit apparently recently decided that a good investment would be GameStop, and they all agreed on that. Now GameStop, if you don't know what GameStop is, it's a video game retail chain that deals in trade-ins of physical copies of video games. Their whole model is based on, you play a game, you get tired of the game, you bring it, you trade it in, they give you a little bit of money for it, and then they turn around and sell it for a pretty good markup. Now GameStop is largely considered to be the Blockbuster of video games, and that's because the video game console manufacturers are moving to a digital only format. In fact, this recent release, the PlayStation 5, you could buy two models. One was for $400 with no CD drive, and the other costs $100 more if you still wanted to be able to put a physical copy into the PlayStation and buy your game that way. Otherwise, you download it from the PlayStation App Store. So GameStop's fundamentals have led the hedge fund managers, the big Wall Street gurus, to start shorting the stock. And what a short sell means is you're entering a contract that when you purchase a stock and when it hits a certain price, you sell your stock and you make money that way. The problem is it's really a bet, and if you bet wrong, if the stock does not drop like you thought it would, it causes you to take significant losses. And that's what happened. These hedge fund managers had GameStop shorted. The Wall Street Bets forum, Reddit, the members there start buying it up. The prices start going up, and the hedge fund managers start losing a lot of money because they got this stock shorted. And what they do when you lose money on a short is you purchase the stock to cover your loss, which has this kind of compound effect of further increasing the stock price. So GameStop went from, I believe it was about $17 a share at the beginning of January. It's gotten as high as $400 something, I believe. Currently it's trading around $200 is what it was before I got on here to make the video, and it's fluctuating wildly today, and that's what we're going to talk about. So as this kind of unbelievable, unprecedented run on this stock that was not considered a good stock, not to have good fundamentals, has begun, today finally the brokerages, a lot of the middlemen that facilitate buying and selling to retail customers, such as ourselves, you and me maybe, they started pulling the stock. They started pulling the GameStop stock where it couldn't be purchased. And Robinhood's a investing app that advertises itself as the investing app for the people, for the little guy. And Robinhood pulled the GameStop stock from sale. You can't search it, you can't sell it, you can't purchase it. It's unavailable for trade if you have a Robinhood account. Well, this upset some people because people are losing money or they're not making money because of this, and it's led to some lawsuits being filed, one of which we will look at was filed in the federal court in New York. And let's pull that up. So let's take a look at this. The Lawsuit was filed in the United States District Court, Southern District of New York by Brendan Nelson. He's an attorney, a resident of Massachusetts. As you can see, he's filing a class action complaint. Now he'll have to get that certified by the court before he can proceed with this class action lawsuit. But we're not going to spend a lot of time on that. Let's just kind of look at the causes of action and what's going on here. So the nature of the action, we just kind of went by that. This is just a very short synopsis of it. Robinhood, online brokerage firm, they willfully and knowingly removed the stock GME, that's GameStop's abbreviation, from its trading platform in the midst of an unprecedented stock rise and deprived retail investors of the ability to invest in the open market and manipulating the open market. The jurisdiction, the parties are Robinhood, Brendan Nelson, the various corporate structures of Robinhood. He's going to sue all of them to make sure he gets the right one. When you sue a corporation, sometimes they'll come back and say, well, you sued Robinhood Securities LLC, but you really should have sued Robinhood Financial LLC. It's often easier just to sue them all and make them sort it out. The jurisdiction and venue is just an explanation of why this lawsuit was brought in this particular court. The factual allegations. Okay, so let's look at this, all right? On or about March 23rd, 2016, Robinhood's official Twitter account stated, "Let the people trade." So that's what I'm saying. Robinhood advertises itself as the investing app for the little guy, the people that don't normally invest, the people like at Wall Street Bets. So they have since disregarded their mantra and have blocked access for millions of its customers to trade particular securities. On January 11th, stocks in GameStop Corp. GME began to rise. At that time, Robinhood allowed retail investors to trade the GME on the open market. On or about January 27th, Robinhood, in order to slow the growth of GME and deprive their customers of the ability to use their services, abruptly, purposefully, willfully, and knowingly pulled GME from their app, meaning retail investors could no longer buy or even search for GME on Robinhood's app. So why would Robinhood do this? Well, we don't know yet. I suspect that they have investors, that they are invested themselves in investments that are taking a loss on this, and they're doing this to cover themselves or cover their investors because the losses were hurting them. So since pulling stock from their app, GME prices have gone up, depriving investors of their potential gains. I think they've since gone down because of pulling all these people pulling it and it people not being able to trade on it. Additionally, in the event GME goes down, Robinhood has deprived investors of shorting GME in the hopes that the price drops. So here they throw in Financial Industry Regulation Authority, which governs the brokers, espouses Rule 5310 regarding best execution and interpositioning. Rule 5310.01 requires that Robinhood must make every effort to execute a marketable custom order that receives promptly and fully. And obviously, if they remove the stock from the ability to be traded, they are not executing their duty as outlined in that rule. Robinhood continues to randomly pull other securities from its app for no legitimate reason. Yes, there's no legitimate reason. I don't know that's random. There's other stocks that were moribund that have been kind of hit on by the Wall Street Bets group, including like AMC Theaters, stocks that really the projection for them by those who kind of the old guard, I guess the Wall Street guard, have been shorted because they look, AMC I think recently just had to float a loan to stay open. So these stocks don't have long-term growth potential by most of the experts. So then the plaintiff talks about the attorney that filed this. He talks about how he was also invested in, or trying to invest in GME, and he wasn't able to. Then we get into the class action allegations. I'm not going to go into all that, but just know that this does still have to be certified as a class action. If it is, then a lot of other people will be added. That's a good way to build up a pretty significant case, even if the losses are relatively small. On each individual loss is small. If you can aggregate a lot of people, it makes the loss much larger, makes the case relevant. It makes it where the company has to respect it. Cause of action. Okay, so this is, what did Robinhood do wrong? What are they alleging that they did wrong? The first one's breach of contract. Okay, so, and this I think is a strong cause of action. The app is entering into a customer agreement that they are going to facilitate trades of stock, and part of that means that they need to facilitate trades of stock even if it's hurting them or their investors. They don't need to try to manipulate the market by closing off potentially millions of people from investing in stock that they want to invest in. They put their customers at a disadvantage compared to customers who use other trading apps. For example, I just looked. I use E-Trade. E-Trade, you can still pull up GME. I didn't actually go through and see if you can buy it, but it's still searchable. Robinhood, you can't even search GME at this point. They are breaching their customer agreement by making this move, and I think that's a good cause of action. It's also a breach of implied covenant of good faith and fair dealing. What that is, there's what we call implied covenants, and these are agreements that may not be explicitly stated in a contract or a user agreement, but they apply to customer-seller transactions nevertheless, unless they are expressly denied in the contract. So without reading the terms of the agreement with Robinhood, I do not know if they deny any covenants or not, but this covenant of good faith and fair dealing means that basically when you enter into a commercial transaction with a person, that you're going to treat that transaction in good faith. You're going to be fair. You're not going to try to slick talk them. You're not going to try to cheat them. You're going to do everything on the up and up. You're going to deal with the person the way you would like to be dealt with. Then we have negligence. Negligence again. You have a duty. You breach the duty that proximately causes someone's harm, and they have damages. I think negligence is going to be difficult to prove in this, because even in the allegations, as you saw, they're alleging that this was done knowingly and intentionally. Negligence is a mistake or an accident. Usually, it's something that you didn't mean to do. You just weren't careful, and bad things happen because you were careless. I don't think negligence fits in here. Then there's breach of fiduciary duty. I like this because breach of fiduciary duty gets you a lot of extra damages. Breach of fiduciary duty is just a relationship between two people in which one person has to put the other one's interest above their own self-interest. So an attorney with their client, they have a fiduciary duty to do right by their client. Executor in a probate estate has a fiduciary duty to the beneficiaries of the estate. And a financial planner or manager may have fiduciary duties to you to not, do things with your money that benefits them. Even if it doesn't harm you, when there's a fiduciary duty, you're not allowed to make decisions that benefit yourself, even if it's not to the detriment of the person you owe the duty to. So in this case, if they're able to show that Robinhood or their investors or their management or whoever were benefiting from stopping the trade of GameStop, then and they're able to show that there is a fiduciary duty owed to the investors and to the customers of the Robinhood app, then they're going to win on that. And you can get, exemplary damages if you show a breach of fiduciary duty. So that means you can get your economic damages that were foreseeable, and you can get more on top of that. It's kind of a punishment to the person for doing wrong by someone that they were in a position of trust to be with. So as you can see here, they want punitive damages. That's punishment damages for the willful, wanton, and reckless behavior of the defendant. They want the attorney fees. If they get a class action, those will be, pretty high. And an injunction requiring Robinhood to reinstate GME on their trading platform. So what an injunction is an order by the court to do something immediately. Injunctions can be entered before the case is actually adjudicated. So you can have a hearing on an injunction where you come forth and you put forth evidence, and the judge rules whether or not the injunction should be granted. So they're trying to get them to put GameStop back on there while this goes through the court system and is figured out, which can take years. So yeah, so that's what we're looking at here. This is pretty interesting stuff. It's going to be interesting to follow it, to see how down far the rabbit hole these things go. Why did Robinhood pull the stock? What obligations do these third-party investors, these investing apps, which are kind of new things, what type of obligations do they owe their customers? And is this market manipulation? Is this, some type of insider trading type thing that maybe the SEC can get involved? We'll have to see. I know I saw before I started the video that this has hit the desk of President Biden, that he's having to look at this and deal with it. So this is new territory. This is the further example of how the internet is completely changing the world, changing our lives. And now we have a group of people banding together on the internet and driving up stock prices, even though traditional wisdom tells you that nobody should be investing in the stock, not to the level that they are. So this is really unique situation, and it's going to be interesting to see how it plays out. So thanks for listening and watching. If you enjoyed the video, please hit the like button, subscribe to my channel. I'm going to continue to put out these types of videos. We're going to move into some other type of material as well, maybe look at some movies and what they're doing right or wrong and how realistic they are. I'm also going to put out some just legal tips occasionally, things that maybe you come across in your day-to-day life that may help you figure out or understand why they're happening. And if you got any videos you'd like to see me make, just make a suggestion down in the comments below. Thanks a lot.